ahead, we believe we're in an environment of higher structural inflation, higher interest rates, and shorter cycles. This is going to be an environment of increased geopolitical risk and elevated uncertainty, and hence higher volatility. In turn, we believe is that these factors are going to lead to greater volatility in the earnings streams of companies due to the unpredictability of input prices and more variability in economic and business cycles. So with this as a backdrop, we believe it's quite reasonable to conclude that investors are going to develop a greater appreciation for stability and consistency in earnings over the coming years. In particular, earnings that prove to be resilient, irrespective of the broader economic environment. We see investors gravitating to less exciting businesses that are extremely well run and businesses that can compound their earnings consistently through prudent capital allocation. The United Durables Equities Fund is a long-only global equity strategy managed with an absolute return mindset. The portfolio manager takes a very unique approach to investing in equity markets, and his philosophy often leads us to a very differentiated opportunity set and a group of portfolio companies that are often quite different from many other global equity managers. The fund aims to invest in stable companies with good track records that have low economic sensitivity. It's focused on identifying a set of businesses that possess three key characteristics. The first is stable and resilient earnings that provide a foundation for long-term compounding. Secondly, businesses with excellent management skill to enhance the probability of long-term success. And finally, companies that are trading at a moderate valuation. So what do we mean by stable and resilient businesses? The fund seeks out companies with consistent and reliable cash flows irrespective of what is happening in the broader economic cycle. To put this into context, if it is found that a company's earnings have more than a 15% sensitivity to broader economic conditions during our assessment, that's a business that's not suitable as a candidate for the portfolio. This is what we mean by resilient and stable. Secondly, the portfolio manager takes a very unique lens to identify companies that can generate stable, compounding returns but also provide downside protection. Many equity investors tend to consider higher returns and downside protection as being mutually exclusive. The pursuit of higher returns often drives investors towards growth or value disciplines, both of which can be volatile. The quest for downside mitigation often leads investors to higher quality blue chip companies, which historically have had less volatility, but also less upside optionality in strong economic and market environments. The fund seeks out to find opportunities in the in-between. Companies we gravitate towards typically do not fit into the traditional criteria of value, growth, or quality for investors. We tend to find opportunities in unfavored or under-researched sectors, geographies, or in the small or mid-cap sectors of the stock market. The most compelling ideas often are in areas of the market where there is higher perceived volatility relative to reality. This allows the portfolio manager to identify companies with attractive risk-return profiles, but also have the stability in their earnings and trade at a discount to their fair value. A key part of the fund's process focuses on identifying excellent management teams. Management teams that can add incremental value over time. Management teams that are humble, teams that are focused on shareholder value creation, and ultimately on generating strong, consistent, and reliable returns for shareholders. Finally, the overlap of characteristics with growth, value, or traditional higher quality equities also means that a portfolio of unconventional stable companies can provide diversification relative to more traditional allocations than many clients already own. At the end of the day, buying stable businesses at the right price provides an opportunity to build a portfolio of companies that are less volatile than the broader global equity market while still generating attractive returns. Since the start of 2022, the fund has demonstrated its resilience, stability, and downside protection in a volatile and uncertain market. The idea of this portfolio came about when Dan Posen, the portfolio manager, thought about how he would manage his mother's retirement portfolio. What he envisioned was a sleep at night portfolio. So if I were to leave you with a message, it would be these 3 points: durability, discipline, and diversification. In terms of durability, the fund is focused on companies that have proven to be resilient in the face of uncertainty. For example, companies with low economic sensitivity and the ability to generate consistent earnings irrespective of the broader economic environment. Disciplined. The strategy's buy-sell discipline aims to ensure that we're well positioned to achieve the proposed target return through a market cycle. And finally, diversification. The fund's investment process leads to a portfolio of durable companies that can potentially provide meaningful diversification relative to more traditional global equity allocations.